Hello everyone and welcome. Today I will be presenting how to generate a six-figure income trading futures only 2 hours a day. And my name is Anka Metcalf. I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade the futures and the equities market. I've been doing this and I have been trading my own account for the last 15 years. And prior to becoming a professional independent trader, I come from investment banking background where I spent more than 10 years. I'm the designer of an institutional proprietary trading system, and the reason why I'm mentioning that I'm just a designer is because I cannot take credit for it. I did not invent it, but I have adapted an institutional model for the retail trader. My system is based on price support resistance, and my price support resistance is more than meets the eye, so it goes beyond the basic supply and demand, the basic support resistance, and I carefully assess all 7 layers of price support resistance. I am also very keen on trigger times, and in fact, I do have a perfect example for you today, because I have a big surprise for you today. Not only that I have promised you all the really cool things that I'm going to present today, but I'm going to show you not only my favorite times to trade, but I'm going to show you my favorite strategy, and I'm going to share with you how the strategy played out in the trading session today, so no later than today. Also specific price zones that I look at. So not all prices carry the same weight, and there are certain prices throughout our charts that indicate more than anything else, and it has the same significance as support and resistance, and I'm speaking about the 7 layers. Also, chart synchronicity and divergency. Obviously, it is a little bit more easier when we're trading synchronized charts, but when we're having divergence, trading becomes a little bit more challenging. And for this reason, what I usually do is I lower my risk per trade and my risk per day, so I don't lose a lot in case I lose on a treacherous day, such as a divergence day, because these days happen. We don't have every day with perfect synchronicity like we have today. Today is like throw a dart, and literally I've traded all the indices. Also have a strict set of trading rules and a 10-point scoring system that, believe it when I tell you this, I've been using this for more than 20 to 22 years. I still use it to this very day. It is on my desk. I use it because it is a reminder of the rules that I need to implement for each of the trading day. I have also been featured in a lot of financial magazines, and I'm also going to be participating at the forex at the Traders Expo, the Futures Traders Expo in Chicago, so in July. So if you guys should be around in that area, please stop to say hi at the Trade Out Loud booth. Also, you can find us on social media, on Twitter. We do post a lot of free trading ideas, and you can interact with us. And here's my agenda for today. Number 1, why traders switch to futures trading and why you should too. Because if you're a stock trader, you know, this is definitely something that you really want to look into. The possibility of forex, I don't know why I keep on saying forex, the possibility of futures is definitely out there. I'm going to share with you the advantages and why I made the full switch to futures trading when it comes to day trading. And believe me, I have been an equity trader my whole life, and it was very hard to drop out of, to pull out of an addiction, the stock addiction. But hey, you know what? I'm still trading my addiction because I'm still swing trading stocks. All right. Also, I'm going to be sharing you towards the end of the presentation, like I said before, the number 1 trading strategy that generates me income in the first 2 hours of the trading day and gives you the best possible trades and the best possible odds for the rest of the day. I'm also going to be sharing with you what are the best times to execute trades, because when it comes to trading, the market has a certain tempo, and you really need to respect the market tempo in order to align your perfect setup with the right timing in the market. This is not something that, again, you mess around with. And if you find yourself that you're stopping out a lot of times, even if you had a perfect setup, and if this resonates with you and this makes sense to you, and you recognize yourself in what I'm saying right now, is because you haven't executed the trade at the precise trigger time, because the market has a certain tempo, like I said. I'm also going to share with you how you can exploit earnings to trade futures. And in fact, today is Wednesday. It is May 9th, and tomorrow it is a big day for NASDAQ. And why is that? Well, NVIDIA is going to report earnings, and this is going to be a big mover, a big catalyst for NASDAQ. Definitely NVIDIA is a big component of NASDAQ, and I'm going to show you in the upcoming slides the possible impact that it may have on our indices. I'm also going to be sharing with you how to follow the institutional money flow, because when it comes to, and today was a perfect example of how to follow the institutions and where the big money is being made and where the big money is being shifted and rotated into. I'm also going to be sharing technical analysis. Hey, guess what? I'm going to be an open book today, and I'm going to be sharing with you what indicators I use to achieve over 75% of the batting average. And we do have a transparent portfolio. We can provide all of you guys here, and in fact, it is you can find it. It is very easy to find. And I'm not sure if I can mention it or not, but anyway, we'll discuss that at the end of the presentation. And definitely it is, you can have easy access to our portfolio. It is out there, trust me. All right, so let's get started. First of all, why do I trade futures? Well, because futures offer me the liberty to make more money in a very short period of time, other than trading stocks. I'm going to show you some examples. But for other traders out there that have smaller account sizes, futures is definitely a great option, because one of the reasons many traders gravitate towards trading futures is literally the relatively low startup cost, right? So for example, you're usually required to have about $30,000 in order to open a stock day trading account. And you must maintain at least $25,000 to keep your day trading account status, because guess what? If you lose $1 within that account, your day trading status is closed. You can only swing trade in that account. And the futures market, on the other hand, offers you, and the futures market allows you to open an account for as little as $5,000, and there are brokers out there that can accept even a smaller amount than $5,000, and especially if you're trading overseas. But even here in the U.S., there are plenty of brokers that can offer you that opportunity. And best of all, guys, you don't have to maintain that amount. So as long as you have sufficient cash in your account to cover the margin requirements to trade the commodity or the index or the bond, that you could actually have a lesser balance and still be able to trade futures. So what I mean by that, you open a $5,000 account and you start trading, you start trading NASDAQ, or you start trading the mini Dow. You can trade even if you have 2 or 3 losses. Or if you lose $1, if you lose $1 below that $5,000, guess what? You are still going to be able to trade, okay? And definitely there are other commodities that you can trade with less than $5,000 margin requirement. For instance, I'm thinking about oil, right? And oil is in demand right now. Oil is nearing a real extension area, a real target area right here, but definitely had a tremendous run, right? Over $71 even today, right? A power push today. So what are some other reasons why a lot of traders gravitate towards futures, and what was the number one drive that made me take a closer look to trading futures? Because I was basically looking at futures mostly to hedge my positions, but once I used futures to hedge more often, I realized that, hey, you know what? This is a better option for day trading. And I'm going to share with you why. First of all, is the advantage of the buying power, right? The stocks versus futures. So I need more money, right, in order to make a bigger move, a bigger profit in stocks, right? So you cannot make big money with little money. But when it comes to futures, you can make big money actually with little money. And how's that? So if a trader, let's say, wants to day trade the Qs, right? And this is the ETF for NASDAQ that is priced hypothetically, let's say at 151 for this example purpose. The trader will need over $8,000 to buy 100 shares. And if the price goes up 50 cents, which is considerable, right? Considerable. I'm not talking about a day like today, but it is considerable. Then you make only $50 because each cent, guess what? It's $1. So this is a small account. This is what you could do, a small account. You could do, and this is, trust me, 50 cents in a stock is massive when you have a small account, because you're not going to be able to trade Amazon, Netflix, Facebook, etc. You're going to go for smaller price stocks like, I don't know, RIG, right? Or a smaller targeted price for a stock. If you trade, for instance, let's say the mini NASDAQ, let's say that hypothetically is priced right now at 61.20, right? Even now it's trading at 68.92. Okay, but hypothetically 61.20 for this example purpose, you need about $6,300 in buying power in order to purchase one contract. And if the price goes up 50 points, so the same amount of points as for its closer relative, the Qs, guess what? You profit $1,000, okay? Because each point is $20, so you can see the weight. For you to understand this concept a little better, I have an example here that will show you exactly what I mean by that. So last year, I had this example because this is when I took the snapshot and we tested it side by side. So traders can see literally the advantage live, and we did this in a live webinar. So at this point, we used the same setups, we used the same principles that we use for our proprietary methodology at Trade Out Loud. And we bought long, we got a position long of 100 shares at 151.47. You could see the position highlighted here. You can see the buying power here is about $8,000. And you can see that the price moved 1 cent. So you can see that after it moved a cent, it is $1. Now, let's take a look at let's take a closer look at its closer relative, which is the futures contract. The futures contract definitely required a less buying power, and it required $4,900 in this example. Using the same methodology, we bought at the exact location. You use the same principles that we used for the Qs. We bought it at 6221.75. You can see the price right here. Once the price moved one tick, because this is how the futures market works, it moves in ticks and it moves in increments. 4 ticks to a point in the mini NASDAQ, so 4 ticks form 1 point here. Obviously, it moved 1 tick because it moved 1 tick. Here it is, $5. 4 ticks is $20. Now, 20 minutes later, same setup, same strategy, same exact time. So we initiated the trades at the same time to the second. And you could see right here, using the same principle for the buy, the trade duration was 20 minutes from 206 to 226. You could see the Qs have advanced right here, and the advancement was to $32.48. You could see it right here from our initial entry of 151.47, and it was trading, you could see it right here at 151.80. So the accumulated profit for this trade was $32 in 20 minutes, exact same principle. And we have the side-by-side example in NASDAQ. NASDAQ, same principle, same entry, duration, 20 minutes from 206 to 226, up $200, up $250, I'm sorry. So you could see it right here. The price initiation was 6221.75, and it was trading here at 6234.25, $250. So would you rather trade something within 20 minutes that literally, and the risk is the same, by the way. The risk was the same. Would you rather trade something that makes you $30, or would you rather trade something that makes you $250? Okay, and I think the answer is redundant, because literally you get the picture. Now, let me show you on charts. If I would cover right here the symbols, you would, and the prices obviously, you would actually think that this is a carbon copy of the same chart, right? Well, that's wrong, because there are 2 separate charts here. We have a chart of the Qs, And this is the ETF for NASDAQ, and we do have the futures contract right here side by side. This is the NQ. And what I want to show you here is that through this measured move, and this is an example, guys, from this week. So it's not an example that was from last year. It was not an example from yesterday. This is from last week. This is from this week alone. So you can see that these were very important breakout areas. Okay. So this was a base breakout right here. These are the parameters. We use the same entry. If you would have traded the Qs for this beautiful breakout right here, you would have made $1.50. You would have made, this is an $1.50 move, which is considerable, right? Each cent is $1, so you would have made $150 on this move right here. And guess what? You need to have $30,000 in your account. But if you trade NASDAQ, you can open an account for $5,000. You could trade NASDAQ and you could take advantage of the same strategy that we have used. And you can see that the breakout here was initiated exactly where the arrow was at 66.50. And it moved all the way to 67.50. So this is the measure move right here. And this is an 100-point move for a day trader. And this is, now these things don't happen very often. I have many examples in our charts today with plenty of other examples of choppy markets. But in a continuous market, and especially if you're going with the trend, right, this is what you can expect. So this move right here, you can see that this is a 15-minute chart. So this is basically a 1, 2, 3, 4, 5-hour move. This at each point being $20. This is a measured move of $2,000. So my question to you is, would you rather trade stocks and spend the same amount of time, making, let's say, $150, when you can apply the same proprietary principles and actually make $2,000. I mean, to me, this is literally a no-brainer. And yes, this is one of the reasons why more institutions, and I'm talking about institutional traders, are dedicating traders to their futures desks rather than anything else. Okay. Now let's talk about maximizing capital efficiency, right? So the leverage available in futures trading allows us to utilize our capital definitely more efficiently, right? So for example, if you have $200,000 and you want to trade the S&P 500, I'm going to share with you, there are 3 options what you can do. You could either buy $200,000 worth of the stock, right? And this can be done by purchasing the ETF. So that is the spiders. It is trading in a share like, in stock like shares, right? So each penny is $1. Your exposure in this trade would be $200,000 worth of the SPY. Your second option, if you have a let's say a retail account or a day trading account, you could have a 4-to-1 leverage, or if you have a swing trading account, that is a 2-to-1 leverage. It all depends on the broker, and these things can vary. But definitely this allows you to control the same size portfolio by using leverage, and therefore you will only be using on a 2-to-1 leverage. You're only going to be using only $1,000 of the capital, of your capital. But if you buy futures on margin, taking advantage of the approximately 10-to-1 leverage available in the mini S&P 500 contracts, will allow you to control, guess what? Will allow you to control the same $200,000 right here by leveraging only $20,000. So I think that is pretty potent, and that is pretty amazing. Now, one of the reasons why I love trading the futures market is because I don't have to focus on 4,000 stocks that are, literally trading every day. I don't have to focus on gaps. I don't have to focus on any specifics when it comes to stocks, because guess what? Everything is going to be reflected within the index. So if you want to trade a stock, let's say, if you want to trade a stock, there's a lot of research that goes into it, right? You have to determine whether, especially if it gapped up or down or whatever, you have to find out the reason, and then you have to find out all sorts of information on the chart, and there are a lot of fundamentals, not only technicals, that come into play when it comes to trading stocks. But when it comes to trading futures, guys, you're trading the components, you're trading the indices, which are the guidelines for the stocks, right? because we know that each index, within each index, there are a lot of stocks that are components, right? And each of the component has a different weight within the certain index. So for instance, the mini Dow right here is formed by 30 very powerful stocks. mini S&P 500 is formed by 500 stocks. So basically they're averaging out the price right here. NASDAQ the same, and we're going to get more into this as this webinar progresses. I'm going to have more details for you, but basically this is my watch list. This is what I do every single day. So I get up, I pop up my platform, and then I'm looking at the mini Dow, S&P 500, NASDAQ, and Russell. If you were stock trading, you have to use these charts anyway for guidance. So it's a double whammy. It's a double homework that you need to do. And why is that? Well, first of all, you have to look at the indices anyways, because you have to determine, the relative strength. You have to determine divergency or synchronicity. You have to determine, key parameters for the indices and how they react, so you can correlate your stocks according to the market indices. That's how it works in the stock market. But when you're trading indices, basically you're trading the guideline for the stocks, okay? So it simplifies your trading. In all reality, you have more focus, right? Because whether you're day trading or swing trading, this is your go-to, these are your go-to windows right here. So this is my whole daily watch list right here. I watch the mini Dow, the S&P 500, NASDAQ, and Russell on a day-to-day for day trading purposes. And I also have oil and gold on my watches as well. These are more likely swing opportunities, but most definitely in some cases, I look for day trading opportunities in these commodities as well. What to trade for best profit potential for swing trading? Well, for swing trading, you have the whole futures panel right here. So you have your indices, you have your energy, you have your softs, you have your metals, you have your grains, you have your currencies. Basically everything that is within this panel is amazing for swing trading. For day trading purposes, like I've mentioned, I only focus on the Dow, S&P, NASDAQ, Russell, and sometimes I do have my eyes very closely at crude oil and gold, but that's pretty much it. But for swing trading, everything, right, including indices. One of the other reasons that I love to trade, why I love to trade futures, is definitely the time flexibility. I have a lot of traders that come to me and say, you know what, I would love to learn how to trade, but I can't trade I can't day trade or swing trade the stock market because, I have a full-time job, or let's say I'm on the West Coast and I start my job at 9 o'clock or 8:30 and I have to be at work, or even if I work from home, I have to take care of other matters. So what do I do then? Well, guess what? You have time flexibility, which is on your side. This is close to a 24-hour market. It provides you tremendous opportunities. I'm going to share with you why this is important and why a 24-hour market is so important. Well, first of all, I like to trade the sweet spot, right? Because our class today is focusing on the first 2 hours trading in the morning. And this is where, you find your bread and your butter is just perfect. And you're getting great setups and you're getting great opportunities, because this is when things move the most, okay, within the morning. And the sweet spot is nothing else than the overlap of the European session over the New York trading session, providing more volatility, providing more liquidity, and providing better opportunities for us as day traders and also as swing traders. So literally this market is open 6 days a week. It opens on Sunday night at 6 p.m. Eastern time, and it closes at 4:15 p.m. Eastern time on Friday. So you can see the flexibility. It's close to a 24-hour market. It has some halts throughout from 4:15 to 6 o'clock. And the first halt is around 4:15 to 4:30. Then it reopens, then it closes again, and then it reopens, and it calibrates again. And the new trading session starts at 6 p.m. Eastern. But there are a lot of traders, let's say a lot of West Coast traders, that take advantage of the market, of this market opportunity. And not only West Coast trader, East Coast traders as well. Let's say you have a full-time job, you're working from 9 to 4 or from 9 to 6, and you can come back into the market, and guess what? The market is there. It's open for you. It's opening for you at 6 p.m. Eastern, and it's providing you with tons of trading opportunities, because guess what? If the price is moving, you can make money. You can lose money at the same time, but guess what? If you lose money, you can make money, okay? So it's just a matter of being on the right side of the trade and interpreting the market, you know, and knowing what to expect from the market. So the market never sleeps, guys. The futures market never sleeps. It's a 24-hour market, 6 days a week, and there are plenty of opportunities that happen throughout the entire 24-hour cycle. So what I want to show you here on the chart is this is a cycle. It's the market. If you could see my dot here, the market opens at 6 p.m. Eastern, and it literally closes at 4 p.m. And you could see that this is a 24-hour continuous move right here. So you can take advantage of whatever's happening, whether you're an Asian trader or European trader or an Australian trader or even a US based trader. Guess what? You could take there are so many opportunities that you could take advantage of in this 24-hour market. And hey, guys, newsflash, we're into this news-driven market, and this is a reality, and it's here to stay. And, you know, and right now that I'm speaking to you guys, I'm still in some trades, and they're just blasting higher. It just make me super, super happy because I'm making so much money today. All right, so why trade the 24-hour market? I'm going to show you some of the day trades that are already closed today and some of the swing trades that I'm still in. So that's the reason why I get very excited. I'm very excited when I make money in the market. And to me, this is the most rewarding thing, to make money in the market, right? Because this is the only way I get paid. So the stock market opens at, it is open from 9:30 a.m. to 4 p.m. Eastern, right? And versus the futures market that is literally open 24 hours a day, 6 days a week. So guess what? Newsflash, geopolitical events and news events throughout the world do not wait for the market to open, for a stock market to open, and events happen. That's why you see the gaps that are happening in the morning. You know, if there's an overnight event that is going on anywhere else in the world while we are sleeping here in the US, okay, market is going to react to it. And the futures market obviously is going to react. You could take advantage of it, right? Remember Brexit, remember election, those were the big money that were being made in the market. That big drop that scared everybody off on February 2nd and 3rd and 4th, I was the buyer right there at the bottom in my trading room, and we were long. In fact, this year, I don't know, maybe we had maybe 2 or 3 days and where we had some shorts. Other than that, we were long. And guess what? Because we know how to read the direction. We know that the big money, the institutional money, is into the long side. It is not into the short side. Many markets that affect the U.S. market trade outside of the U.S. market, okay? So would you rather wait and see the gap up or the gap down, and you'll have your hands tied? Because if you're into a trade, whether it's an option trade or whether it is a swing trade or whatever it is, you have your hands tied. Or if you're a day trader, guess what? You have to wait until 9:30 to try to take advantage of that move. And if you already had a 300 down move to the upside or to the downside, guess what? It's pretty much done, right? So you have to wait for tons of pullback for you to leg in. Where the futures market, you see it, you take advantage of it. I usually have my computers on all day long, and I only shut them down when I go to bed. But I have alerts that are triggering on my phone throughout the night in case, you know, I usually have hard stops in, so I don't get, annoyed if I get trailed out of a trade or if I get stopped out of a trade. But and I have alerts and I have my orders layered out as I'm exiting trades when I'm sleeping, okay, when I'm sleeping. By the way, beautiful market right now. All right, so here's some other reasons why I love to trade futures. Well, first of all, you could take a short position on more easily. You don't have to look at your platform to see whether it is easy to borrow or hard to borrow. There's no uptick rule, okay? No uptick rule. For those of you that are stock traders, you know what I mean. there's reliable volume. So, you know, this is a market. This is a very liquid market. For example, the S&P liquidity is over 2.3 million transactions per day. So you have a very reliable volume. You have better commissions, way better than stock commissions. You do not use a scanner. I use a scanner because I constantly monitor the market because I do swing trade a lot. And so I'm actively investing in the market, and I need to keep an eye on the pulse of the market, but you do not need a scanner because you're not a stock trader. So if you're not a stock trader, you don't need a scanner. That's another $250 cost, okay? No special indicators. Guys, cut it out with the indicators. I get questions. I probably receive about 20 to 25 emails every single week asking me what indicators do I use and what indicators do I recommend? And I said none. I'm gonna be sharing with you what I trade on my charts. Guys, the only individuals that are making money off these indicators, guess what, are the ones that are selling them. Okay, they're the only ones that are making that are making money off these indicators, and they slap them on the chart, you know, and then they go like, oh, this is what I'm watching. Oh, if it goes into this little line, it's going to do this. No, price is the only real indicator. And unless you know how to read price, you're not going to be a professional trader. You're just going to be a follower of an indicator. There are a lot of tax advantages. Here in the U.S., you have the 60-40 rule. You got simplified reporting at the end of the year. You just get a 1099-B form. It's so easy to report your earnings at the end of the year, so therefore you don't have that extra expense to hire an accountant, right? Because definitely, you know, and especially trading accountants are very expensive. I know that for sure. I know that for a fact because I do pay a lot because guess what? I usually, because I, you know, I trade stocks, so therefore the accounting is way different than if I would trade only futures, right? You get lower income tax rates and you get a lot of deductibles if you are a full-time trader, so you can discuss that with your accountant. Any classes that you take, any services that you use can be deducted, so look into that. Definitely consult your accountant. You can hedge. Traders can offset some of the risk by using options as an insurance policy to hedge against futures contracts. There's no pump and dump. It is safe from rumors. I mean, I haven't ever heard of a rumor saying that, oh, I think the S&P is going to do this and that, or there's going to be some restructuring at the S&P. Is like, hey, are you kidding me? No, so it's safe from rumors. It's not like you're trading, I don't know, Apple, or it's not like you're trading VLO or anything that can happen with a stock, right? So there's no manipulation. You don't have to worry about downgrades and upgrades, which is a huge plus, right? Because if you're in a swing trade and your stock received a downgrade, right, it's not going to be pretty because it's going to be set you back for a little while until it pulls back and finds its new balance for it to resume back to the upside if it does that, okay? And basically one other thing that I already mentioned, yes, low commissions, right? So why is this the best and the right time to start learning how to trade futures? Well, first of all, second quarter has started, and by looking at the earnings reports, I have noticed that there have been tons and tons and tons of companies that have beat earnings. In fact, today I was going through the companies that beat. I think one of the companies were today's reports. One of the company was in line. All of the companies that I was reading about today before the market opened at about 8 o'clock or 8:30, they were like beat. Okay, so they beat expectations every single stock. Okay, that I came into contact with this morning when I did my pre-market game plan. So earnings season is still in full swing. We still have a couple of weeks left, or even 3 weeks left of really dynamic movement, and where we can expect follow through like this. So we have a blessing of a market that we have going on right now. I have been long, like I said, for many months now, and I think that this is a market that is here to stay, and it's definitely going to continue higher. It's going to provide us some tremendous opportunities. I didn't even mention the fact that one of the reasons why I love I love what I do and I love my job is because I'm my own boss, right? I don't have to worry about anything else. What I give into this market is what I get back. So the more work and the more commitment I have to the market, the more the market rewards me, because there's a certain commitment that you need to have with the market. Your trading day does not start at 9:30 when the day trade opens, and does not end at 4 o'clock or at 11 o'clock or 11:30 when your trading, let's say, window opens. But you have to be in permanent contact with the market and see how it's behaving. You have to watch every single movement that happens, analyze a lot of charts. Even if you're at work in your lunch break, you can go to your smartphone and look at some charts and just analyze the price action and see how it behaves. You're going to learn volumes from the market moves. So don't think that, okay, I'm going to be trading only 2 hours a day. Okay, don't just be a follower. Learn to do it for yourself. Okay. Not only that you're your own boss, but you are, even if you have a full-time job, you don't have to worry, about, when you start learning how to trade, and once you get going, you don't have to worry about, oh my God, what happens if I'm going to get fired? What happens if there are going to be some restructuring in the company? What happens if this happens? Like what happens if anything, it's like you have a secure job, and the sooner you start, the better it is. And you're never going to feel sorry for making this shift to whether take on, trading as, let's say, as a new, I wouldn't say hobby, but as, let's say, as not a temporary, but as a part-time job. Take on trading as a part-time job for yourself, for your career. Invest in yourself. There are tremendous ways where you can learn how to trade, wealth of information. These webinars offer you tremendous wealth of information. And I haven't heard about a webinar where you will not learn something. So definitely, if you're serious, if you're brand new to trading, definitely this is the way to go. Attend as many webinars as you can. Try to find your educator, find someone that resonates with you. Make sure that they have a good performance, because, hey, what is an educator without showing you the real performance, And it's just not numbers that are popped on the screen. No, I want you to show me your entries, your stops, your target, your thought process, okay? When you trail, show me your trail, show me how you trail, show me how much you risk per trade, So all these details are very important to any kind of trader. So going back to why this is the best time, well, we still have very powerful earnings. Take a look at this list of stocks that are due to report this week. NVIDIA tomorrow, like I said, Disney reported earnings today. The stock was down this morning. I haven't looked at it much, but one of the reasons why the Dow was having a hard time picking up the pace today was because of Disney and with Walmart. And again, it was the news that influenced Walmart, right? The news that influenced Walmart that gap down, okay? The news that influenced Walmart that gap down, right? So in futures, you don't have that mess. In futures, you work yourself up, and the index is going to move its way either up or down depending on the case. So we're going to talk about this a little later when we discuss charts. So basically what earnings season is the return of volatility, and also fundamentals that are the catalyst for the market move, whether it is news, whether it was the Iran deal, there were a lot of market jitters, the market reacted in the right way and continued higher. And I had, pretty much, I really didn't have any kind of thoughts about the market, going lower, because basically when you think about it, every single detail about this deal was already discussed, and it was expected. So the market priced in whatever was going to happen, and there were plenty of rumors that created the market jitters, and we have that oscillation in price prior to 2 o'clock, and then the market stabilized. And you know what happened in the overnight market session, right? All the indices have rallied tremendously. So here are some examples of some potential trades, but before, and I'm going to go through these and then I'm going to show you guys some real examples of some trades that we've done today in the trading room. And this is an example in gold. This is one contract in gold right here, $350. I'm not going to discuss entries just yet. We have a separate chapter for that. Just going to show you some results and the potential for futures. This is once again one contract here in copper, over $2,000. And basically, guys, these are not just numbers that are slapped onto a sheet of paper. So I can tell you, oh yeah, I made $7,000 on this trade. It's like, really? Where's your P&L? Okay, this is the P&L. This is the proof right here. These are with the exact entries, the lot sizes and everything. And this is how we do it in the trading room with transparent results. I trade my live accounts. My traders can see my positions, can see where I place my stops, can see where I have my targets. And basically everything is transparent. And to be very honest, in all reality, my number one priority is for myself to make money. All right. My number one priority is for me to make money. And then I love to share the trades with the room. So I post them at the same time that I take the trades. They are mentioned into the room. Sometimes it happens to me that I miss a trade. For instance, a day like today, I missed a trade. My traders were still in that trade. They added to that trade. I never got the opportunity to leg in again into that trade because I was so busy posting the trade. Okay, but in reality, I ended up a fabulous day today, so I'm not complaining there. So basically, these are the results that you're going to see, and our trading room is 100% transparent. Here's another trade here. $2,000, and this is a copper trade again. So trading gives you the liberty to do the things you literally love in life, and it creates a lifestyle. This is not a job, so I want to mention the fact that don't consider this as a job. This is a lifestyle. It has to flow into your bloodstream, and you need to love what you're doing, because other than that, this is not going to work for you. Trading is not about buying Lamborghinis or Ferraris. Trading is about creating a better life for yourself. It's about being able to provide for you and your family a decent living, and even create wealth. It depends on how serious you are and how much dedication you have, and how disciplined and patient you are, because guess what? You don't have discipline and patience. Discipline and patience are more important than your market strategy. And if you don't have patience and discipline, you're never going to achieve consistency in trading. So trading is a lifestyle. Trading is something that is going to flow into your needs to flow into your blood. You have to be 100% connected and be one with price, and the price needs to speak to you. Let's talk about some gains here, some more, and you can see the time frames here. This is close to 12 o'clock right here, 11:58 when I took the snapshot. And this is a trade in NASDAQ, and this is $1,400, and this is the trade based on reversal and divergency. And also 11:39 right here. This is a trade in gold. You could literally see the amount of patience that a trader needs to have over here, because other than this is the chop zone, and this is the eventful zone. And the trade triggered a little later on the day at 11 o'clock. I remember this day when we took this trade. So this is the chart of patience right here. So there were no trades called from 8 o'clock all the way to 11 o'clock. And when the opportunity, we discussed the opportunity for this trade way before the market opened. But again, the trigger came in very close to 11 o'clock. But take a look at the reward, $7,400. So the patience pays off. If you don't have patience, and if you learn to trade these little ticks and bits and pieces and little TikToks and whatever they are, it's fine. That's for you. But I'm going for the big moves. I'm not going for the chop zones. I'm just going for the nice fluent moves with the institutional money being on my side. I don't want to be against institutional money. There are a lot of traders today that shorted the market, and guess what it did? It just made the market pop higher, 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 higher. Okay. So this is what I mean. Okay. So this is basically The patience is literally a virtue. Okay, let's take a look at another chart here, also in gold. This is done by 10 o'clock. You can see $3,600 here, done by 10 o'clock, perfect trade. Oil here, here's another trade in oil, and this is with one contract, and this is $1,400, guys, and this is with one contract. Okay, natural gas, and we're going to talk about patterns in just a sec. This is another trade, natural gas, and this is a swing trade. But guess what? $14,000. Okay, we had another trade prior to that, $14,000. I don't have the screenshot for it. I don't think I have the screenshot for it, but we made over $24,000 on that trade alone. NASDAQ again, this is a scalp, okay? This is a scalp. The market was not going anywhere. Chop, 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 chop. And you could see that multiple scalps into the same trading session provided, and you could see the scalps right here. So there were multiple scalps, provided me $1,500 on this trade. Okay, so first of all, you're going to be asking me, okay, what indicators do you use to achieve the 75% batting average? Well, first of all, before we talk even about indicators, let's talk a little bit about market analysis, because how many of you really know how to put things together when it comes to technical analysis? The one thing that helps you in technical analysis is not identifying support resistance on a laser focused time frame. So if you're a day trader and if you were taught to pay attention and you were taught to, trade off, let's say the 1 minute or the 2 minute time frame, because that's that is the time frame that you need to trade, wrong. You couldn't be any wrong. You need to use a multi-time frame alignment. There are day trading time frames, then these are execution time frames, and there are analytical time frames. So news flash, the 1 minute chart is going to do exactly what the higher time frames are dictating it to do. So you're going to pay attention. And yes, you're going to, today, actually, we did have a trade in V-mini S&P, and we did have a trade in Russell this week, the swing trade in Russell. And guess what? They were based on a weekly chart. Yes, we correlated the weekly chart to the 2 minute chart. You don't know how to do that, you're not going to achieve consistency, because the higher time frames are dictating, and you have to look for certain parameters. It's not easy, but it's achievable. And you have to look at certain parameters for you to have your index work for you, like in stocks as well. So why is analyzing old time frames very important? Because it keeps you on the right side of the trade. Therefore, there are a lot of traders today that were shorting the mini Dow, they were shorting Russell, they were shorting NASDAQ, they were shorting the S&P. And guess what? I would love to buy from them. And institutional traders could not go any faster, with both hands and grab their contracts so they can accumulate and buy as much as they can to drive the price higher. Why? Because I did have confirmation from higher time frames that they will be doing that. They were lining up and they were just ready to start. You know what? You know how they were lining up when, at a race, right? When you're watching, I don't know, when you're watching NASCAR and you have all the cars lined up and they're like zooming, zoom, zoom, boom, boom, their engines. That's the feeling, and that is exactly what it was shown on the weekly charts today. It was that boom, boom thing that literally showed me that they're ready to run for the races. That's the reason why we were long, okay? So higher time frames dictate. Set up that form on higher time frames. Set the stage for intraday trades, for momentum trades, or for trend trades. Once you have that boom, that trigger that goes on, and once they're off to the races, it is very hard to leg into the trade. And I know some of you guys out there just jump in trades. That is the worst possible decision, because your risk is really high, and that is a recipe for a disaster. Trust me when I tell you this. I'm going to have more information on that coming up. So how to exploit earnings to trade futures, right? So a lot of you are going to say, okay, so yeah, so NVIDIA is going to report tomorrow. How am I going to trade the indices and actually benefit from NVIDIA's earnings? Well, company earnings are released before the market open or after the market closed. Booyah. So there's a huge advantage right there, often causing substantial moves in the underlying stocks outside of regular trading hours. So these moves are happening outside of trading hours. And translation, the futures market is open, right? The largest reactions typically occur when a company substantially exceeds or misses expectations. Having access to extended hours trading will allow us, only us futures traders, to react very quickly and promptly to the news and participate in the initial reaction to positive or negative news in the underlying stock. So for example, okay, you can capture tremendous moves that happen in NASDAQ from earnings reports like Amazon, Google, Facebook, Netflix, Apple, etc., right? How to exploit earnings to trade futures? Well, there are still 3 weeks here. You can see we are right here in week number 5, right? We are right here in week number 5, which is pretty much going to be consistent with next week and the following week thereafter. The most active session was right here in week 3. But guess what? Surprise, the market really didn't do much within this week, within the 423 to 427. Didn't do much. It was still consolidating. You know why? Because the higher time frames had their brakes on and they said, rain delay, okay, rain delay. So they were not able to participate to the races. But right now things are clearing up on technical charts, on higher time frames, and we're pointing out to very good potential for another run up, okay? So just one mention to you guys right here guys that are day trading. This is not a downtrend, okay? We're not in a downtrend. We're in a secular bull market, and this is a very much bullish market. What we had right now from February 2nd till now is just a brief pullback. If you're looking at higher time frames, you would actually see that you would go fearless long in long positions, okay? You would be fearless in going in long positions, and you would buy every single pullback. That's the reason why buying the dip works in this market, because this is a secular bull market. All right, let me show you how it's done. So this is a chart of NASDAQ right here, bottom right-hand side. And in fact, in this very day that I have the example here, Google, Amazon, and Microsoft reported earnings both at the same time after the market has closed. After the market has closed, I positioned myself here for a buy or a sell, okay? So what that means is that I have my buy order, and before I even was triggered, I had my stop loss order as well. What this means is that if it would pop higher, I would have went long immediately, and my stop would hold like a would actually hold like a stop. And then if it were triggered to the downside, then guess what? If all of these companies would have missed earnings, right? Then I would have went short, and my long entry would have become my stop. All right, but these are technical things that are in place. So I was long here at 60.50 right here and looked for a very nice target into the 6100. Boom, booyah, target achieved, beautiful target level. Take a look at these stocks, how they perform right here, a beautiful flurry to the upside. But guess what? Because I'm a futures trader, I could actually let this position and monitor this position until I go to bed, look for the little pullback, look for a reversal area so I can place my stop and then go to bed, okay? When I woke up, okay, this is what I found. Now take a look at the little profit, and I'm not saying this is little profit because they would have still profited from this trade right here. Okay, they would have still have profited from this trade right here, in the New York trading session. But how awesome it is if you are a well-astute, educated trader to benefit from this whole move. This whole move right here is making your month. It's not even making your day. It's not even making your week. It's making your month. Now let's get down, because like I said, I have a big surprise for you. And we're going to be talking about the #1 trading strategy to generate consistent income, right? And then I'm going to be showing you some charts from today. So beginner trader only needs to master one strategy. But guys, I know that many of you have been trading for a while and really know what I'm talking about. But if you're very new to trading, a strategy if you don't know what a strategy is a specific set of conditions. So these are market conditions, right, which outline the ESTR. And the ESTR is the entry, stop, the target, and the risk, right? So you define through technical analysis what your best technical entry is, what your best technical stop is, what your target is, and what risk you're applying, okay? A lot of times there are a lot of traders that think, oh, I have a $20,000 account, a futures account, I could trade 5 contracts, let's say, of futures at the same time, ignoring the risk. So they have no idea how to position size. I mean, are you serious? And you're trading a live account? Are you really serious? And then you're wondering why you're losing money? Okay, that's because you don't know how to evaluate risk. Risk is very important to evaluate, and position sizing is the one thing that is going to make you break you as a trader. Literally, it's going to make you or break you as a trader. A lot of traders are giving up trading. Why? Because they don't have the patience to wait for trades. And they're not around anymore. They're not around anymore. And that's one of the reasons why only 5% or 7% of traders make it in this industry. That's the reason why only a very small percentage of traders make it in this industry, because they either run out of funds, okay, and they're done, right? Because they don't, what do? They say, okay, I'm going to give it a blast at the market. They have no idea what they're doing, or they're just, blindly following someone or whatever it is. And they're just doing it by trial and error instead of becoming educated and knowing what you need to do in order to have the right buttons and know what buttons to push in order to be successful, in order to have a successful trade. Because a strategy, in order to apply the strategy, you have to know the whole entire system. Because I can tell you right now that the best strategy, and I'm going to share with you that one of the best strategies in an ongoing bull market or even in the bear market is to pull back to specific key areas for long and short positions, right? But if you do not know, the whole system that forms and that you need to take consideration when you're applying the strategy, then you're not going to have a successful strategy because you're going to miss parts, right? It's like you're going to IKEA, you're trying, and you bought a table and you have 4 legs and 2 screws, right? It's going to be wobbly. It's not going to work out for you, okay? So you better return that and go back and, and that's a waste of time, right? Because you wasted time, you wasted gas, right, to go to the store and back. You wasted time in line to return the table and so on before you get the right table at home. Okay, here are some examples of some trades, and this is, this is from the 7th, so this is from this week right here. This is a day trading portion of Russell right here, and in fact, this is one of my swing trades as well. You probably know where the Russell is trading right now, right? I just took profits. That's the reason why if you heard me like little, silent at one time, I took profit. Okay, 1600, I'm done. I'm done with Russell. What a beautiful run to 1600. Okay, beautiful run to 1600. Just wanted to pop the chart real quick because I'm very excited. And this was my entry right here. And this was the swing trade, guys. I'm going to show you today the day trade. Okay, let me just put it up for you. RTY. This is the day trade. Okay, this is my active trader. You can see this is my real account. You can see it right here. You can see my orders right here. Boom, 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 boom. Okay? All right? Everything is transparent. Everything that I do is transparent. Absolutely everything. All right, $500 here. Okay? Let me show you another trade today. Okay? And take a look at the size, guys. This is 2 contracts. So what I do with Trade Out Loud when I trade, I have 2 accounts. A smaller account where I trade 1 or 2 contracts, and I have a bigger account where I position size, right, and take higher risk for my trades, obviously. So this is going to be times XX, okay? So this is what I wanted to show you. These are the results for today, and this is no later than today, okay? And you want to see my losses? Okay, today, $20 loss in NASDAQ, okay? I didn't repeat the trade. $20 loss in NASDAQ, all right, compared to $1,000 win and $500 win, right? In YM, we had 2 trades in YM. We had 1 trade and where I wanted to pull my stop out, okay? All the traders that were in my trading room heard me. Some were quick enough to pull the stop. Some were quick enough to pull the stop, and we added, okay? Let me show you what we've done. Okay, this was the zigzag right here. Our first buy was 2,400 right here. And we had a very tight stop into the 50s. Okay, we had a stop into the 50s, and I saw that it was really trying, the institutional traders were really trying to run some stops. All right, they were trying to run some stops. I didn't want to be part of that, so I said, let's pull the stop, let's pull the stop. By the time that I said let's pull the stop, and I was showing them in the trading room on the charts on how to do it and what I see going on in the chart, by the time they pulled the stop, right? So they were still in the trade, and I got stopped out because I didn't have the execution time to move my mouse from one screen to the other to cancel the stop. It was that fast, okay? It was that fast. All right, this is the secondary entry at 24,300, okay? And this was the stop at it was at 272, and the trail out was at 410. Okay, this was a 410. This is the trail out at 410 for the day trading portion of it into 1230. So this is the morning trading, what I want to show you. This is the morning trading, and these are the results. Well, the results for Russell are tremendous, right? From 75, 25 points, right? 25-point move, right? And each point is $50, right? And we locked in $1,200, $1,250 per contract, $1,200 per contract. The trade was initiated on the 7th, 2 days ago, okay? Pretty amazing result, and especially if you have a small account. Russell right here, here's another example. Obviously Russell, one of my favorites since it came back from ICE, and you can see that sometimes it lines up with very tight entries in non-volatile markets. Keep in mind, guys, these are volatile markets, and in volatile markets, your risk per trade, your stops are going to be a little wider. If you don't respect your stops, boom, bye-bye, you're going to be wiped out, okay? But you have to respect your stops. This is key. This is number one. But in non-volatile markets, you can take advantage of. Markets are not always volatile. We had 2 years of non-volatility. 2 years of non-volatility. I was praying for some volatility because it was like watching paint dry. Okay, and finally, now that it's here, you're going to have wider stops. Okay, but it is what it is. But you're going to get more fluent moves and more dynamic, faster moves. So you can have stops of about a point. And this is the pullbacks into the key locations that I've mentioned. So you have to know what these key locations and where these reversals are likely to happen and how to correlate time frames. So you nail down, you pin down your entry, your stop, your target for your specific trade. So in this particular case, you had a 1-point stop and the point generated 5.5 points. That is a reward of $275 per contract. If your risk per trade, and again, pay attention, this is position sizing right here, right? Position sizing, $500. If you're applying a $500 risk per trade, then guess what? Your profit for this trade alone is $5,000. And this is easy trailing. It was an easy trade. Here's another example, and by the way, it was within the same day. Remember, this was the first entry. So once you have a trade that works for you, never abandon it. Go back to the same trade, focus on the same chart. And the advantage with futures is that you can pay attention to the same charts. Okay, so it's very important. You actually only watch those 4 charts, the indices, right? So you can have a better focus. So we nailed it again, key location. So we did have the pullback, and we had the reversal that happened. And in this case, we had a 2-point stop. You can see it right here. This is $100 risk per trade, right? Because each point in Russell is $50. And the realized P&L was $250 per contract. Once again, if you had a risk of $500 within this day, right, you have $1,250. So $5,000 with another $1,250, $6,250 in one day, and you've only risked, guess what? You've only risked $500 for each trade. So your general risk for these 2 trades were $1,000. So you risk $1,000, but you make 6 times your risk, over $6,000, okay? This is the mini S&P, and this is just an example for the short side, because I know we talked about the bullish side because we're in a bull market, but I saw this example and I didn't want it to go away. This was from February 27th this year, and this was actually the only time when I shorted, okay? So it was a pullback into a key level, and it reversed and it went back down. So this is one of the shallow pullback. So this is not a long right here. So you have to know exactly when to go long and when to go short. Don't make that mistake. Try to learn how to be on the right side of the trade. Don't just go short and see if the short doesn't work, you're going to go long. That's not the option. Okay, you're going to be fleeced out of trades in either direction. This is another example of a pullback buy into the 67, into the 67.50, which is a key zone location, and a reversal. Okay, take a look at how clean these setups are. If you're having cluttery charts and cluttery patterns, okay, you're not going to make money, because guess what? If you're not seeing the setup, it's not you. Nobody's seeing the setup. Okay. So for that reason, nobody's going to take the trade. So it's going to be only the algorithms that are going to chop us around within that area. So wait for clean setup. Remember, when it comes to futures trading, you should only have 2 to 3 trades per day. That's it. Maybe one. If you're having a choppy market or an ugly market environment, just have one trade. Or if you're having a more dynamic environment like today, which is crazy, by the way, because Russell is just going to break out right now again. Yet, you know, you can take more than 2 trades per day, and you're going to have the odds in your favor. But look for clear setups. This is another example right here of another trade that was executed. And you can see that this was a reversal at a key zone right here. So we waited for the pullback. Take a look at this morning, how choppy it was right here. So we had the open range and chop around. This is a 5-minute chart for 5, 15, 20, 25, 30 minutes, okay, until reversal occurred, right? And then finally broke out higher. Now, don't you think that there were a lot of traders that were thinking here, oh, this is a short, it's right into resistance, boom, this is going to work out perfectly. Are you kidding? I'm not going for 10 to 15 points or 20 points. I'm going for the big bucks when it comes to trading. I am going to stay in the trade and go with the institutional money flow as much as I can. I'm not going to go against it, okay? Literally not go against it. I'm going to tell you more about that in just a second. This is another trade right here, and this is gold, over 2,300 achieved in this trade. Let's talk now about best time to execute the trades, okay? What are the best times to execute the trades? Number 1, if you're trading the morning session, I'm going to share with you these times. I'm going to explain to you exactly what I mean by these times. Market opens at 9:30, right? From 9:30 to 9:35 in regular market environment, you have the market balancing, the market calibration. After the market has calibrated from the open, right, and that's the fleecing effect, and that's when I usually like to stay out. Today I was a little bit more aggressive, and I actually saw the potential for my first trade in the mini Dow. And I jumped in a little earlier, not just jumped in. I looked, evaluated, and I took the trade. Then the second time when I'm looking at the market and looking for some sort of formation of setup to happen is the 9:45. The 10:30 is by far my best preferred timing into the market, because it is the time when it actually provides the best entry opportunities into a continuous whether bull or bear market. These are the pullbacks. The pullbacks that are happening at 10:30 are usually the ones that are either continuing to rally throughout the end of the day, or they continued to drop into the end of the day. So the first 30 minutes, the first 30 minutes to 1 hour of the trading session is the most important trading session. If you're a swing trader, you know what I mean. That is the time when you're going to look at the market to possibly raise your stops, et cetera, et cetera. So very important. And one of the last trigger times, and I'm talking about only the morning session, is 11:45. 11:45, this is a reaction time when you're going to expect some sort of a pullback, and this pullback that occurs here is going to set the stage for about 1:15. Okay. Oops, I'm sorry. This is a typo right here. There is 11. I'm sorry. There's 11:15 and then there's 11:45. Okay. So guys, there's a slight mistake here. I don't know how to correct it. Okay, so there's another time, it's 11:15, and the next time is 11:45. Okay, then these are the reaction times. So let me show you exactly what happens within this time frame. So you're having when you're having a market rally right from the start, you're getting a dynamic move from 9:30 to 10 o'clock, and from 10 o'clock you can expect a pullback into 10:30. Now, depending on how this pullback is behaving, whether it's shallow or steep, it's going to dictate how price action will react for the rest of the day. If the price is going to break the 10 a.m. high, the likelihood of the index or commodity continuing higher are very high. And if the index or commodity are going to break the 9:30 low, then the probability is for the index or commodities to continue lower. However, things are, and then again, if the trades resume from 10:30 and never challenge the prior low into 10:30, but reverse and continue higher, breaking the 10 a.m. high, they're likely to continue into 11:15. To 11:30, okay? From 11:15 to 11:30, you can expect a reaction. Usually the reaction, if you're having an ongoing market to the upside, keep in mind, this can be flipped to the downside as well with the same timing. For downtrends, apply for downtrends. But if at 11:15, you can definitely expect a reaction. And then there's another opportunity and possibility rather than opportunity. Okay, so you're having the chop in the market. Now, when you're having a really choppy market from 9:30 to about 9:45, and sometimes in a case like today, that the market continued, guess what, into 11 o'clock. Okay, so continued until 11 o'clock, and the actual trigger came at 11:15 today. I'm going to show you that on the chart. So you had this chop continue all the way to 11:15, right? At 11:15, you have the reaction time today, and let me show you exactly what I mean by that. Okay, let me just drag the chart up real quick right here. All right, so when the market moved here, let me just show you really quick. Okay, when the market moved here, this is the open range, right? Oops, let me just get my drawing tool high. Okay, this is the open range right here. Okay, and this is the low and this is the high. Now the high is a little here. Let's see if I can delete this. Okay, I removed the drawing, and let's put it right here. Okay, so this is the open range. Take a look, 9:30. 9:45, 10 o'clock, no reaction. 10:15, 10:30, no reaction into 10:30. Strong reaction into 11:45. Why? Because the balancing occurred right into 11 o'clock. Take a look at, hello, beautiful. S&P here triggered, guess where? At 26.75. This was our entry. 26.75 was the entry right here. 26.75, beautiful entry, right? And you can see that it rotated, beautiful move into 11:45. So you can see what I mean by it, right? And this is in a choppy market environment. So you're going to ask yourself, is it worth, to learn how to trade? Definitely. Is this something that you can learn by trial and error? Definitely not. Okay. How about, and if you do not have any trading education, if you're just jumping into trading right now without any prior education, think about this. Do you think a doctor that just graduated, a student, right? You just graduated high school and then you're jumping to performing surgeries, right? Don't you think that you'd have to go to med school? You have to have some practice before you start surgery. Right? Same thing goes with the market. You're going to be chopped around. You're going to kill someone, right? Or in this example, you're going to kill yourself. You're going to kill your account, not yourself, but you're going to kill yourself, your account, right? So you have to learn how to trade with the big sharks. Why should you care what the institutions are doing? Well, the institutions are the big sharks. Traders need to learn how to swim along with them. Today was a perfect example. I navigated these trades with my trading room today, applying some institutional proprietary systems that only institutional traders apply, just because we know what they're doing, okay? Institutional sharks see your orders for breakfast and for lunch, and they love to take it from you. And perfect example was today, okay? Institutional money creates the current that moves the market, the waves. These are institutional moves that are happening in the market, okay? Experienced traders have no fear because they know how to surf the waves and stay with the wave and ride it until it's safe to exit the trade, okay? It's safe to exit the trade. So if you're a trader right now that, sees this big move that occurred into the market, okay? So let's say you are, you're here and you missed the perfect entry, okay? And you're seeing the market move, you're seeing the S&P go to 87 to 90, etc. And you just go like, oh, what the heck, I'm just gonna jump in. You may get lucky and you can take advantage of this move a little higher. Wow, beautiful, 2,700, just beautiful market. So you're taking advantage, you're jumping in, you're taking advantage. But guess what? How do you feel if you were the trader that took this trade at 26.99 or 26.98, hoping, and your whole entire trading system and your whole entire trading plan is based on luck and based on nothing else but hope, okay? So not having a solid ground. This is what happened to you. You're going to be washed out, and then you're going to go, I'm going to buy it again here. I'm going to buy it again here. I'm going to buy it again here. And this is what happens. You're going to be fleeced out of the trade. So you have to know when to get in the trade and when to get out of the trade. Why? The next time you feel the urge to pull the trigger and just jump into a trade like a super novice trader, think about this. If you were a hedge fund, would you execute that trade? Of course not. You would see how stupid it is. If you're an institutional trader, would you do that with hundreds of millions of dollars? No, you would not do that. Would a portfolio manager pull the trigger when you would pull the trigger? Just jumping into a trade or not respecting the market tempo, not respecting reversals, not respecting the proper execution and having a management plan for your trade? No. Would a big prop trading company educate their traders or instruct their traders to buy a certain position at that level? No. What? You would be fired, okay? You would be fired immediately. Would a market maker do that? No. Would a hedge fund manage? Would hedge fund managers do that? No. Algos, they're training. We have to know how to trade with the algos. Actually, I do teach a proprietary trading system that is literally carbon copying algorithmic trading and institutional trading. Okay. So the next time when you're in the market and you want to jump into a trade and without having the right timing on your side, without having the proper setup on your side, without having the proper position sizing on your side, and many more aspects, think about this. 10% of the traders make money from, guess what? From the 90% of the traders. That's why it's so easy for institutional traders to make money and come ahead. I run a futures trading room, also provide education, but I run a futures trading room that has a new schedule. It is now open from 9 o'clock to 4 p.m. Eastern because we are traveling through very treacherous market environments, and I want my traders to benefit from my knowledge, and I want my traders to execute the trades that I execute. So basically they can learn from what I'm doing on a day-to-day basis, and trust me, they're learning a lot every single day. This room is for day trading and swing trading futures, but not limited to futures. We do call stocks as well and options. And basically what you're seeing right here is my setup. And right now I am sitting right here at this desk speaking to this very microphone right here. So this is what I have on and on every single day. That's why I don't miss a beat. I have a scanner. I have, my watch list. I have my old, my multi-time frame charts here. So I have this is exactly how I have my setup, my computer set up right now, except now here I have you guys. I have this webinar session on. Let me share with you a little bit about the trading room. So the room is geared to close the gap between education and practice, and basically the room was created for one single purpose: to benefit the trades that to benefit the traders that I train in executing and creating the proper training wheels for them to continue further, because I don't want to have followers. I want to have traders. I want traders to learn from me, and then I want them to execute their own trades. I don't believe in, having a perpetual student in the room or in class. I believe in, coming, trading with me for 3 months, 6 months, or a year until you develop your own trading capability, and then, learn to fly. The room focuses obviously in the morning. We start every morning at 9 o'clock with a pre-market game plan, which is a thorough analysis of all the indices, and all the traders have to be there at 9 o'clock, because other than that, they're going to be asking all over the world, oh, why are we taking this trade here? Where's the target? Where's this? Like, you're going to be lost in space. So you have to be, your trading day starts with me at 9 o'clock. We do a thorough market analysis. I call 1 to 3 trades a day. Maybe the trades will vary. Today I had a plethora of trades, more than 3. And obviously the number of trades depends on the market conditions, because we have to trade what the market gives us. In a very choppy market, guess what? Maybe we're not going to take any trades at all. I have exact entry stops, targets, and I manage the trade in real time for my own account, and I do it live for you guys as well in the trading room. The trading room schedule, like I said, it is from 9 o'clock, and it's 4 o'clock right now, not until 11 o'clock. Also, we focus on the major E-minis, on NASDAQ, S&P, YM, and Russell. We also focus on bonds. These are more for swing trades, bonds, gold, oil, silver, natural gas, and copper, and other softs as well, obviously. Just want to share with you guys the portfolio for our first quarter, and we've just ended the first quarter right here, 16,563. If you would have traded with only one contract, let's say you're a super novice trader, you have no idea what you're doing, you're following me blindly, you would have ended up, the first quarter was $16,000, over $16,000 in 3 months. Okay, so $16,000 in 3 months. That is about $5,000, over $5,000 per month. This I did at the beginning of the year. I will release my full portfolio December 31st. This is what I have realized right here in the first month. You can see it right here. These are trade managements, okay? Trade management, and that's the only difference here, because I trailed differently. There was one stock that had a swing, and I trail it a little bit more differently. It's not much of a difference, and you could see it right here. So the overall P&L, 6,700. At the end, you could see it here, January 31st. Okay, this is from my brokerage account from TD Ameritrade. Okay, and you can see it right here. All right, this is the picture snapshot of January 31st, 6,700, 62,000 right here. If you would have traded with 5 contracts, and I know there are a lot of you guys that are jumping into prop programs, $82,000 with for the first quarter, not too shabby. Okay, that is, if you would have traded with 5 contracts, that's $20,000 a month. Okay, I have a special offer, and it's only for you guys. You're not going to receive any emails from me or anyone else than the organizers here. It is a futures trading room access for day trading and swing trading. Like I said, it has extended hours from 9 a.m. to 4 p.m. Eastern time. It is $497, access for 3 months just for you guys alone. It renews. I don't think it renews, but it may renew after 3 months. And you can renew at this price. You can renew at this price, but keep in mind the price is going to go up. Okay, the price is going. The education that I provide in the trading room is off the charts. So it's not that I'm just posting trades in there. I provide the education on why I'm taking the trades, market conditions, everything, the whole shebang. And if you're interested, this is a one-time deal. You're only going to hear about it today and gone. I don't know. I'm going to still have it open for you, but tradeoutloud.com/trading room 1. This is the login. If you want to take advantage of this price, you're more than welcome to sign up for it. Like I said, it's only for you guys right here, and the doors are closed for all the rest. This price is not for my traders. This price is not for anybody else except you guys. Okay, that's it. Except for you guys that are here today. That's it. All right. I don't know if anybody has any questions, but I'm more than happy to see you in the trading room. So thank you so much, Jeanette, for having me here today. I'm really looking forward to seeing you guys in the trading room and just making some money, and just let's rock these markets. And great time to be a trader. Volatility is on our side. So thanks so much, guys, for having me here today. And I'm looking forward to seeing you into the trading room. Thanks so much.
Anna, hey, before you leave, do you want to answer a couple of questions? Maybe like 2 minutes.
Yeah, sure, absolutely. I haven't seen any questions yet.
Okay, all right. Let's try to get through some couple, instead of doing trade-off, we'll do this.
Awesome.
Okay, will your system work on all time frames?
Absolutely, all time frames, day trading and swing trading, yes.
Okay, all right. I'll work full-time at the Pentagon. Do not have the ability to trade the first 2 hours of the trading day during the work week. Can your system be adapted to all time frames?
Absolutely, you can trade around the clock, the system.
Okay, somebody's asking what the futures. If you don't know what the futures market is and it's 24 hours, Google. That's the best thing I can tell you. Okay, what is the minimum account size needed for a new trader? Is there, okay, yeah, they're asking for, is there a trade room training in the evening?
Right. So the minimum account the minimum requirement to open an account is $5,000, and I think there are brokers that accept a little bit less. So I don't advise traders to start trading with less, let's say, than $7,000 to $10,000. It's up to you. And again, there are brokers out there. I'm not going to give any names. You can start trading with $3,000. I do have a lot of traders in my trading room that start with even less than that, and they're making money.
All right, good. Okay, all right. In a sudden, very fast-moving market, would your stop maybe not work? Would the market just blow through your stop? Thanks, BC.
Can you repeat the question, please?
Yes, in a sudden, very fast-moving market, would your stop maybe not work? Would the market just blow through your stop?
The worst case scenario that can happen in market volatility is that your stop is going to hold, and if you are trading off a really reliable platform, your stop is going to hold. Worst case scenario, what can happen is you could get a little bit of slip, but you're still going to be out. But you're going to be filled at a different price than your original stop was.
Right.
But the slippage is not going to be that dramatic. It's probably going to be like, I don't know, if you're trading the E-mini Dow, it's probably going to be 2 to 3 points max, which is literally not much. It's $5 a point. And if you're trading the S&P, probably 2 to 3 ticks.
Right. Okay. Okay. And Lynn wants to know, how long is this offer available to the people that are here today?
I'm sorry, can you repeat that?
How long will the offer be open for the people that are here today?
It's going to be throughout this week.